Hello, and we're back from the shortsaleminute.com. Want to go over a question that was sent in to us, and that's going to be an entire video segment today. The question was, I have a first and a second. I haven't made the payment for 12 months. My second has now been charged off and is with a collection agency. They're calling me, harassing me, help me. What do I do?
Well, in the state of California, and only here in the state of California.
What state was that?
That would be California.
California.
You'll have to check with your state-specific tax codes and your own CPA if you're outside the state of California. But here in the state of California, if it was a purchase money loan, there is no recourse. This is a non-recourse state for purchase money. If, however, your second, in this case, was a HELOC, and you tapped that HELOC and took out cash for new cars and vacations and even college education, whatever it might be, time out.
He said new cars. I knew someone that bought a Ferrari with their home equity line of credit, their HELOC.
Perfect. So, I hope they're happy with their new car.
Well, I don't think they have it any longer, but yeah, long story.
Could be. So, anyway, as long as you didn't tap your HELOC, or actually, as long as the HELOC was closed in, it was simply for purchase money only, you are protected by the laws here in the state of California with regard to the recourse, or non-recourse in this case. One thing to be sure is that you need to be very careful about the information you provide your lender all along the loan modification and short sale process leading up to this charge off and sale to the collection agency, because the collection agency's job is to do one thing, and that's collect money from you, and as much of it as they possibly can. So any information that you've given them, they will use to collect money.
And they're very good at it. And they're very good at their job. They use all the scare tactics. They ask for your firstborn. And I know some people out there that maybe should sign over their firstborn, but yeah, that's a completely different topic.
We won't go there. So with that said, look, the point here is very simple. Be careful about the information you give your lender from day one. Because any information you give them, as I've said, they're going to use that one way or another to collect money from you, or attempt to collect money from you, and so will the collection agency. I would recommend seeking the advice, if you're not in the state of California, seeking the advice of a good real estate attorney or a CPA that can guide you through your situation. If you're in the state of California, please call us. We have state licensed attorneys and CPAs on staff that work with us, and we'll get you through this process. But you need to do this early, not after the fact. Get a hold of us right away.
Real quick, sometimes when you have the first and the second, and even if it's been sold off to a collection agency, depending on if those were with the same lender before it was sold off to the collection agency, the negotiator on the first will still be able to negotiate that second. We don't have to get the collection company involved, and that helps all parties involved. It just makes for a more a seamless transition.
Absolutely. You know, and talking about this just briefly, this reminds me of the situation that you had a couple of weeks ago with a lender who had given you an approval on a short sale for one of your clients. And I'm going to let you tell the rest of that story, because it's a fascinating parallel to what we're talking about here.
Funny story was, I don't remember if it was an email or a phone call I got from the negotiator at this lender. It was only one loan. And they said, look, we're going to have your approval to you later this afternoon. However, please go back to the client, the seller, and ask them if they would like us to seek a deficiency judgment. I think the difference in this property was about $200,000, the difference, the spread, the bank was going to take a hit on. Or they can sign this promissory note that we have drafted for $50,000, paid over 15 years at 0% interest. And I just kind of chuckled. I remember sending back an email, and the reason why I do the email is I like the paper trail. It makes everyone kind of honest, and I have something to fall back on. But I basically reminded them that, look, this is a purchase money loan, and in the state of California, you cannot seek a deficiency judgment for my client, so therefore, they're not going to sign a promissory note. Brings me to another point. There's many agents out there that get very excited when they hear from the negotiators from these lenders, and will have them sign that promissory note. Not saying that I know of any that have, but there's a lot of agents out there that are new to short sales or don't know how to negotiate the deals, and they don't look at the fine print. Even when you get the approval, you want to look at the fine print and make sure a real estate attorney is looking over that to make sure that you cleanse your hands of all liability. That is our main goal here. Going back to my deal that I was working on, the negotiator said, you know what, you're absolutely right. I'm sorry, I apologize for that. Which was a crock, because they knew exactly what they were doing. They were just trying to get $50,000 from my borrower, And long story short, that approval came over that day, and we're going to be closing here this month.
So that's our news for you today. Be careful what you say and who you say it to out there. Be sure you contact us if you have any questions at...
Speaking of contacting us, I made another little drawing. info@theshortsellminute.com equals a happy face. You're going to be very happy once you contact us. So that is it for today. We are signing off. See you next time.